So this is a 5-star glitch, and in an honest sense, this is also a glitch as well. The only thing that separates a 5-star glitch from a simple glitch is the fact that this thing, this leg, this acts as inducement. Now, what is inducement? Inducement is basically tricking people and generating liquidity. So I will explain to you why the 5-star, because that is how you'll understand the theory. So the first leg, the first high that creates a zone. It could be a zone, it could be a glitch. That is not the point now. It could be a zone, it could be a glitch. Any high, you see, this is the high that broke structure over here. So this is the one that breaks structure. We confirm a break of structure and we have a zone with us. So this is the high that broke structure to the left, right? It broke this structure. So this becomes our 1. That is the 1. After the high is made, we come back into the zone, back into the parameters of the zone, and this leg, we call it the 2. And then we make a higher high. We break structure again. We could potentially wick it as well. It could be a wick, it could be a close, doesn't really matter. As long as it's above the 1, we call it the 3. So in this case, you can obviously see like there are first high that broke 1, then the second high, then the third high. Now you see this whole thing is basically just internal structure, because all of it is internal structure relative to the 1. So this all, and the highest point in this case is going to be the 3. Internal structure doesn't really matter. We are talking about the external structure. So leg 1, leg 2, and leg 3. This is all internal structure. Do not get confused with this. All you have to do is swing high, swing low, swing high. These highs are internal, doesn't really matter. And then we have the next leg, and that is what we call as 4, which taps into the unmitigated glitch, and it takes out the 2. The liquidity below 2 gets taken out. People get stopped when the 4 happens, and the 4 comes into something over here, probably the unmitigated glitch. And then we have the 5. The 5 is basically our take profit. Now the whole point of taking this glitch is because of this thing, the 1 and the 2. And why are they important? So when 1 is created, we know that we have a zone. Then 2 happens. Now 2 is the thing that makes this whole model so high probability. It's because it retraces back into the zone, but it does not sorry, oops, fuck, never mind. So when 2 is created, it does not come down and mitigate the 0.5 of this glitch. All it does is that it retraces a little bit. It could be 30%, 40%, 20%. So anywhere from 20, make it like 15. From 15 to 45%, 15 to 45% retracement into the zone, and then we create a higher high. So that marks our 2. It cannot come and mitigate it. That's the point. 2 cannot mitigate the zone. It doesn't have to mitigate the zone. It can come close to it until the 45 level, but not so close that we can also count it as mitigated or front run by a little bit. So 45, 15 to 45. So from here, around about here, all the way to here, every retracement is valid for a 2. So after the 2 is formed, we create a higher high and we raid the 1. We take liquidity off the 1. And then we post a high that creates a 3. So once the 3 is formed, what happens is that everybody that went long on this break of structure, this unicorn model of the ICT, everybody starts placing their stop losses below 2. Now that's the key. Everyone, once they see the 1 get taken out, we close above or we wick above. Since we have actually made a high, the 2 becomes a logical point of setting stop losses below it. And that's the thing. The point is, this leg is what started everything. So 1, 2, 3. Or it could be an ABC move in some sanctuaries of the trading and technical analysis, but that's not the point. The point is, this glitch or this zone is left unmitigated. That's a fucking magnet for price to come back into, fulfill something over here. It could be ERL, it could be a zone, it could be a glitch, it could be an internal zone, this could be a full-fledged imbalance. Anything is a possibility of happening over here. The point is, once the 3 is formed and you have a 2 and an unmitigated glitch or a zone, this becomes so high probability that after the 3 is formed and this is set as a logical point of stop losses, price will come back and take the 2 out. And by doing so, it takes out everybody that had their stop losses below, takes their liquidity, and then reverses. Mitigates the glitch and then reverses. Mitigates the glitch and then reverses. Pretty simple stuff for the 5-star. For some of you, it's a refresher. For some of you, you're learning this right now. And we have seen this happen a lot of times. So, you guys understand this now? For the time being, do you guys understand this now? Okay, great. This is basically the whole theory behind why the 5-star works. All you have to do is identify 2 and an unmitigated zone, and you will have your 1-to-1. Now, there are chances and times when something like this happens. We go above. We come back into this internal zone. That is the point. We come back into here and then we reverse. We go above. Then we take out the 3 as well. The thing is, this glitch still remains valid, and you will often see price do something like this. and then instantly come back, do this. There are a lot of times this happens. You're like, hey, we are closing structure, and you put your glitches over here, you get stopped out on every glitch above until here, but you don't notice that there is an unmitigated glitch with inducement. You try to take that, take that, take that, and the one that works is the one that was created the first time and is acting as a 5-star glitch. And this happens so many times. This happens. So your job to trade this model is to basically identify a zone or a glitch that has 1 and 2 and the 3. 1, 2. Once you go above this, this becomes 3. So anywhere you find an inducement, you fucking put a limit over here, TP over here, SL over here. That is it. That is it. All you have to do is this. Find 1, find 2. If it's unmitigated, it will eventually someday come back, or it could potentially return in 15 minutes, 30 minutes, 4 hours, or a week later, but this will hold. 90% of the times this will hold, and you will get your one-to-one. Now, I will explain it in another lens of emotional market cycles. So let's say I put my SL from the low to the high. From the low of the zone that is unmitigated. After that, the structure doesn't really matter because this zone remains unmitigated. And a zone above is also there. But never, and I repeat, never take a glitch or never take a zone, just a zone. Never take a zone that has an unmitigated zone or a glitch below it or above it in case you are shorting. Because what is going to happen is that you will take this glitch or this zone and price will return below to target this, liquidate you here because you got SLs over here, take the liquidity below this and bounce from here. And oftentimes you see this happening to you, that the zone below your zone works. And this is the reason why this happens, because there is a 5-star glitch just below your potential zone that you are eyeing to take a trade off. This is why it happens. And in this case as well, you see that these are like nested kind of things. So this one, that's a 2 and that's a 3. Now you notice that there is another one. If I just take this, there is another one. Oh, actually, sorry, wait. 2, 3, or you could call it the 3. Okay, that's a 3, that's a 4. Now let me switch to blue. Now notice this internal structure, this zone, not that zone. So what happens over here, this small zone becomes a 1 for this zone. So that's a 1, that's a 2, and that's again a 3, but for the internal structure. And oftentimes what's going to happen is that when we come back down here into this zone, we will eventually get a 1R over here and then drop to take the bigger 2 out as well, and then give you the reaction. Does the model make sense now? Do you understand the 5 star? The 5 star glitch. It doesn't matter if it's 1, 2, 3. As long as you have a 2 and there is an unmitigated zone or a glitch and it's in relative discount with from the leg that it starts, okay, from the leg that it starts. So if it keeps going higher and higher, the higher it keeps going, the more the chances of this playing out. This is the case. The higher it goes, the deeper in discount this becomes in. And that is why it also works in that case as well. In the formation of narrative, that works as well. So do you guys understand what I have just said? Question: if there is unmitigated but not to the inducement 5 star, if there is, that's not a 5 star string. If it's unmitigated and it's not a 5 star, it doesn't have two, it doesn't have inducement, it's not a 5 star. Fuck that shit. The only way that you can trade zones in this case, only the zones, directly trade zones, is the fact that they have a 2, they have inducement. If it doesn't have inducement, you don't trade it directly. OG is not rare. OG happens a lot, but again, once you understand the theory, it's 5 star is so rare. Not really. I can literally find at least one 5 star or two 5 stars every day on one single asset. I mean, you said if 5 star, then we won't take up, or if not 5 star, then. Huh? If it's 5 star, if there is a 5 star and you have an inducement over here, do not take this glitch. Do not take this glitch. Even it could work. It could work. You know, something like this could happen and it could work. But that is a fucking low probability thing. We don't want it. And remember this, because I will talk about this in a second afterwards. But we don't take it. We want to take this as the 5 star, because this is the 5 star. This is not a 5 star. And in this case, oh sorry, not this one. In this particular case, this is also a 5 star. So there are two 5 stars. There's a 5 star here and there's a 5 star zone over there. You can take both. As long as the 2 is present. In this case, this is not a 2, because it doesn't really retrace good enough to become a inducement for this entry. If it was something like this can become a tradable zone to take a trade of 1 hour from. But if it doesn't retrace good enough, as I said, 15 to 45% retracement into the zone, doesn't mitigate it. This is just a zone and internal zone, and the low of this zone acts as inducement, and we don't want to trade this zone, we want to trade this zone. In this case, it retraces deep enough into an already bigger zone that is an inducement for a bigger zone. So in this case, you can trade it. You can get a 1-to-1, and then price will eventually do this to go back and target the bigger zone, the bigger 5 star. So anywhere you see this sort of a model, you have a 2 that satisfies the condition, and then a high that makes a 3. You know that the 4 is coming into this to give you a 1-to-1. So this is the highest probability glitch or decision, highest probability glitch or a zone. Highest fucking probability, because it has a inducement, the factor of inducement. And that's literally just it. That is the 5 star. Any questions about the 5 star now? Okay, if we have 5 star unmitigated, then we won't take above glitch, as you said. But if we have a 5 star glitch unmitigated, not the 5 star If we have a glitch unmitigated, not the 5 star, then we can take the above glitch. Okay. So that is, that is a good question, honestly. Yeah, Malik. Yes, it's basically just that. But it has a two. You know that it has basically an inducement. Fuck whatever the A plus glitch was. That's 2025. We have moved further. We have refined the setups much more. Uh, just stick to what I've just taught right now. So shrink. You have a good question, Habibi. Okay, good question. Let's get into this. I will actually, wait, Shrink, I will answer this question when I teach the shift because the 5 star and the shift actually go together to form a narrative, and in that way, you will understand it much better. Any other question about the 5 star for now? Shrink has a very good question and it will be answered, but if you guys have any other questions about the 5 star, please ask me. And in the meanwhile, I'll show you some examples of a 5 star. This is a gorgeous 5 star that I traded, and I actually posted it in here that, hey boys, this is a 5 star right over here. So this was on BDC right after our class on Friday, around about like almost an hour before the market closed. So look at this glitch. One, this is also a glitch. So a glitch becomes a glitch. Then we have, one, sorry, that's a break of structure. So the lowest point, that becomes our 1. Then we retrace back up. So that's a 2. That's a good enough retracement. I think it's around like 30% of the whole zone. So that's a good enough retracement. Okay, so we take this. Then we post a low, which basically wicks the 1, liquidates the 1. And then we retrace back into the 50% of the glitch. 50% of the glitch. And it takes some time, but eventually it gives the TP. So a solid 1-to-1. Now, let's see if I can find some other examples. I actually shared a lot of examples back in the, yeah. So there is this case, which I have already said a lot of times, that this is a 5-star. So this starts from here. So that's a zone. So that's like kind of like a glitch. So it's a glitch. Price retraces almost somewhere in here, but doesn't really mitigate this. So this becomes an inducement. And whenever price might return back, this is going to be the best 5-star, and it will more than likely work. So you can obviously have your limits placed at this glitch, because eventually whenever price, if it does return, you will have that as a glitch. There was something on the 1-minute chart itself in here. Is okay, so see this lads. This is a 1-minute example, but again the structure remains the same. So see this. Break 1. Okay, this high is the 1. And then what do? we retrace back into the zone. Don't really mitigate it. We just come back into the zone. You can potentially start it from here, or you can start it from here. If you want to make it a glitch, just a second. So in this case, this is just a zone. But if you want to make it a glitch, the things are pretty much the same, okay? But what I suggest normally and usually is to take the whole zone. Sometimes it's the best thing to do. So, just a second. Okay. So a little bit of retracement. So that's like the first high closer. We have a zone. 2. Then we take out this high. See that? This high is taken out. So 1, 2, 3, 4. We wake up 5 times. Then we come back, but we never take out the 2. So any high above 1, unless the 2 is taken out, this remains a 3. And as long as 2 isn't invalidated, this zone is a high 5-star, high probability 5-star. Then you get this, and then you get a TP. Fuck whatever happened afterwards, because I'll explain this in the shift. But regardless of the fact, you got a 5-star. Now if I shift it and I go into the microstructure, there is another 5-star in here, which is basically, no wait, there is no 5-star. Do we have a closure? Yeah, okay. No, there is no 5-star, never mind. There is no 5-star. So 1, 2, 3, 4, 5, that's it. 5 moves. All you need to do is find a 2. The thing is, I am explaining this on a 1-minute time frame because there is an added confluence over here. This was a previous supply which got turned into demand. And that is how I just could use it. Don't fucking trade on the 1 minute, because as good as it looks, 1 minute zones are just weak. They are not so strong as 15 or 30 minute zones. So don't try to do that. Once you have enough narrative formation, if you can put something with the models that I'm teaching, a higher time frame narrative, for example, that you just broke above a support or resistance, you flipped it, and then you are coming for a retest, and there is also a zone in here or a glitch in here, any sort of that thing, that helps. But again, this is for a simple reason, it's not always going to work on the 1 minute. And I also wholeheartedly advise you to stay the fuck away from the 1 minute, because it's not for you. You are not really ready for that for now. Anyways, let's look for more examples. So this, man, nothing really on the gold for now. Anything over here? 1, 2, never a flower. Yeah, gold has been fucking stupid for the past, for the whole Friday. Let's see Bitcoin if I can see some examples for it. Okay, that's something. We have 1, 2. This is what, we don't take that high. BTC is kind of stupid at the moment, but let's say for the sake of this example, if we have something in the region of this, okay, and we go down from here, then we return back up, that's a short. As long as this is not mitigated, we just go below, and we some way we go below this level. It could be a weak structure, it could be just a wick, it could be go below, but as long as it goes below this, it becomes a 5-star glitch. But honestly speaking, it's still a glitch, but I will not trust it, simply because of the fact that on the 1 hour, this could possibly just be a little bit of deviation, or even on the 30 minutes, because it's not really a good closure, you know, it's not a strong closure, it's just possibly a wick. So this could all potentially be some sort of accumulation. This becomes deviation or manipulation, and we can still go a little bit higher. So there's not really a clean setup on Bitcoin for this glitch. It's not a glitch. I don't trust it as a glitch. I won't trade it as a glitch. Okay, so hopefully you guys do understand how the 5-star looks. And do we have any inside examples? Man, not really. So, does it make sense, guys? Does it make sense? No 5-star, no LTF or HTF is better, as long as the point is, why do I say that you have to trade the HTF, is simply because of the fact that more participants are present on a higher time frame. More volume is traded on a higher time frame structure as compared to a lower time frame structure. So if I say that, hey, look at a 30-minute zone and look at a 4-hour zone. So the point is, the more volume was traded within a 4-hour zone, so the likelihood of that holding is much more than a 30-minute zone. A 30-minute zone, as long as it has everything that we have discussed about, is pretty good. But the point is, the 1-minute zones or 3-minute zones, they don't have enough volume for price to actually bounce from. So that's the thing. This is why I do not recommend trading 1 or 3-minute zones, because even though they look A plus with everything, the whole question remains, that does it have enough volume to sustain what our model is? Sometimes they do, sometimes you will see A fucking plus models failing, and then you're like, hey, I did everything. It's just that you are trading, you don't have a narrative on the 1 minute, you don't have a good enough volume within a structure to hold it. It could be like 2-3 candles and you would call it zones. That's not how it works, bro. You are here to make money, and it's highly advised that you take your money and think of your capital as something sacred. You have to protect it, and in order to protect it, you have to take the best setups possible, so that your chances of getting out from a trade in positive and in profit is much higher. You don't have to gamble it on smaller time frames just because you can take more setups. You just want to make you just want to take more setups right now. It's because the only fact is that you are not at a respectable size of risk, and you want to take more trades so that you can make more money. But trust me, it's like you have to reverse engineer it. You have to take the quality setups to actually make more money. You have to do it again and again and again every day. You don't have to do it on every 5-minute time frame. If you want to go and fucking do this, you can go to Cortex, you can go to options or whatever. You can take this trades on like 1 second chart, 1 15-minute charts, 5 minute charts. That doesn't really matter. That's a fucking gambling mindset. And the only thing that tells about you is that you're fucking poor. That's the thing. If you want to trade a high volatility market, that's the lower time frames. Lower time frames is the trickiest to navigate and trade because it moves so fast. So if you think you are so fucking fast, you can read the narratives of the 1 hour, 15-minute, 30-minute combined into a 1 minute or a 30-second chart. Go and be my guest. I don't fucking care. I'm just doing it so that you guys can actually make money. And this is the way that I have made money. Talha makes money. I make money. The people that I know make money is because they choose good setups. They don't trade every fucking setup, every stupid glitch, every 5 star. No, we plan the trade based on the narrative that we know that hey, this is the narrative and this glitch supports the narrative or the 5 star supports the narrative, and then you take the trade. Can I make millions? Yes, you can, bro, as long as you fucking stick to a simple thing, as long as you stick to something and do it, eventually you will win. 5 star doesn't need EMA's trend and bro, everything needs EMA trend and stuff. The thing is that is what I just told you, that you need a narrative when you are planning your trades. You have to look at the narrative. Everything will fail. This structure will fail if you go against the trend. The thing is, what I've just told you is if you use it with the correct narrative, it'll win. If you don't use it with the correct narrative, you'll lose. It's pretty simple stuff. But the thing is that it works. So if you have backtested 250 glitches until now, you got like 70%. You got like 70% win rate. Try to do a backtest again. Try to do a backtest again, and now you will find that you get more than 80% win rate. Just a backtest. I know you can't do it right now on live charts because your emotions are not there, but if you do and test it on, like do it on backtest, you will eventually, if you use everything that I've just taught until now, you will get more than 80% win rate, because now you know what kind of a setup works and what kind of a setup doesn't work. Some of you will still have like 60% because you just want to fucking trade everything and get rich quick, but that's not how it works, and that is never how it's going to work. If you try to make money all the time, you will eventually end up not making money after a month or something like that. Bro, 5 star is not really a continuation setup. The 5 star glitch is not a continuation setup. The glitch is a continuation setup. Glitch needs your glitch needs your what's this called? Glitch needs a trend continuation setup. So it's like a trend. We need the trend. We need to go with the trend on the glitch. The thing with 5 star is that if it's an inducement, if there is an inducement present, it's more than likely going to be in the side and with the trend itself, but it's just going to be some sort of a manipulation. Now, what do I mean by that? Are we bullish? In this case, are we bullish? We're bullish, right? But when the 5 star forms, it's either going to be around here, which is again the internal, like this is the leg that basically says that this is a 5 star. But the fact is, when I look at the 5 star without the EMAs or without the trend, you will find that the 5 star is basically the start of the first actual leg. So this is all 5 minutes, but this is a 30-minute leg. So this is a whole 30-minute leg. 5 star is more than likely either going to be around here, that is the first structure, or it's going to be around here. It won't be somewhere over here. It could be, but that's not the point. I mean, again, it doesn't work all the time. You have to see it play out in front of yourself to actually trust it enough. But the thing is, either it's going to be over here or it's going to be over here. So in both cases, if it's over here, it's with the trend of the internal leg. It's with the trend of the internal leg. And if it's here, it's within the trend of an external leg. So in this case, this would be a 15-minute or 5-minute 5 star. And in this case, this is a 30-minute 5 star. So if this is a whole 30-minute move, we went back up, and so this is the only remaining glitch on this whole leg. I mean, if it looks something like this is also a 5 star, and this could potentially work. So now you have two 5 stars, and it could look something like this. This is all based on the market structure and how fire you understand this. It's, I mean, again, you can ask me questions as much as you want, but until or unless you understand this clearly and pair it with the narrative, you will still be like confused. So go and test it out, see how it works, then come back to me. And then we can discuss, because then you will have some sort of an experience with this, and then you can like understand how it works. He is right. The glitch is actually mid. And most oftentimes, if you ever see me trading the glitch, it's always a 5 star, because I want the highest quality setup. It's always a 5 star, but again, it is a glitch. So if you want to see, if you want to do it in this way, you can fucking forget what a glitch is, and you can add another condition that the glitch that you are going to trade has a 2 in it. So if you want to trade the glitch, it needs to have a 2. So that is just a 5 star glitch, and just trade that. And in anywhere, if you see the 5 star glitch, it could be a glitch, it could be in zone. Boom shakalaka, it works, bro. I have given you 4 different models to trade from, and I've given you all the theory on them and how they work, why the markets work the way they work. It all started from just a zone, and I had to do manual backtesting to see and find the models that work the way they work and how they pair with the price section. Bro, Hussein, it's just basically me judging the price. If I see an external structure, I try to tend to trade the external structure rather than going inside the internal structure, because if you see it close enough, if you see the picture that you have just reshared of mine, notice that there is a fair value gap until the midpoint of the full zone. Okay, and there is also a very tiny fair value gap in the internal glitch. So there is now, I have to see, do I trade the internal or do I trade the external? So if the imbalance is aligning, the first imbalance is aligning on the 0.5 of the bigger glitch or the bigger zone, and it is a 5 star, I will just take that, because in both cases there is inducement. So both cases, that is a 5 star glitch. And I don't want to get front run because for my greed, I don't want to do that. I tend to take external setups and just chill. And yeah. So is this a 5 star? I missed the morning. Yes, one. That is a 5 star indeed. That is a 5 star. Straight a 5 star. Because you see that how fire that setups become, because once you put some sort of inducement in there and don't actually mitigate the zone, the price does come back and then mitigates it and then takes all the stop losses of the people that actually put it there, and then it just goes back low. So yeah. Shift has the highest win rate, and obviously the 5 star. Shift and 5 star again, boys. The thing is, I have the highest win rate among all of you because I have made this thing and I have ton of experience. Don't don't try to do this again. If I trade a shift, I have told you how the shift works, why the shift works, and where it works. I don't want to trade the continuations. All I want to do is I want to take a shift, get a 1 to 1, and do it. So the thing is, as long as you have the narrative and why price is going to do what you are assuming it to do or presuming it to do, may I say, that is why these things work, bros. That is why these things works. And why OG works is literally because it's the last line of defense. If that breaks, the structure breaks. And that is the beauty of OG. That this, when you know, when everyone is cornered, everyone is cornered. Like the let's say the bulls are defending a structure. Bulls are defending a structure. And that there is this last line of defense that if that breaks, the structure breaks. So OG, that is why the OG works, is because it's the last line of defense. So even though it doesn't give you a full as bounce or a drop, that tiny segment, that internal structure within the higher time frame structure works. And that is why it's so beautiful. That it just works. You don't need to target a higher thing on that. You can just take a 1 hour and keep doing it. Why that shift failed? Where did it fail? Where is that? When did it happen? What is it, like 28th of which glitch? Which shift? Is this the shift? No, that's not the shift. Where are you talking? Is this the one that you're talking about? Hello? So yeah, obviously everything has an advantage and disadvantage. It's okay if you miss it, you miss it, bro. That's not the thing. Like, come on. Okay, let's see why did that fail. Okay, 1, 2, 3, 4. Let's see. Do you see why it failed? Or should I show it to you again? Like, obviously it's like purely common sense, but I will assume that the answer is there. Minimum induction for 5 star 15 to 45%. Shift is essentially a very, very easy thing to trade. A shift is basically a market structure glitch, which I have gone in great detail when I was teaching you the glitches in the start, in the mentorship, in the masterclass on YouTube. I'll just go over it again. So the thing is that we are reaching into some sort of a supply and demand zone, and that is an HTF on the HTF. Could be an LTF, but again, HTF for now. So the thing is, we keep creating higher highs and higher lows, right? We are trending upwards to somewhere. And we are obviously going with the trend with all the things in here. We have glitches over here, we have zones over here, we have some sort of a 5 star over here. That is nothing for us. In this thing, what we are going to trade is the market structure shift. The first shift against the trend, the first structure against the trend, we call it the market structure shift. And how do we trade it? It's pretty simple. Let's say that this is a structure on the 30 minutes or 15 minutes. We can use them interchangeably. 15 and 30-minute structure. We reach into a 4-hour zone. A 4-hour zone. This is a 4-hour zone. And this is the 50% entry. So it can be a zone in extreme or maybe some sort of a premium, since we are going to short it. So it's like a zone in premium or trend continuation or a glitch, whatever it is. What I want to do is not directly ever trade it from the 50%. I can do that, but I don't want to risk this whole move. Put my SL over here, put my entry over here. I don't want to do that. What I do is that I wait. I wait for price to come into here. Preferably tap the 50%. And after it taps the 50%, it gives me a market structure shift. Just like this. So now I know that price reached into a higher time frame supply, and then it shifted structure on the 30 minutes, on the 15 minutes. Now I know that the bullish trend, in this case it could be a retracement if we are just going down, down, down. So this is sort of like a retracement. retracement into what? Into a previous structure over here. We come into here, the retracement is going, and once I have a structural shift at a zone of a higher time frame, I have what I call as a shift. A shift is basically just a glitch of a market structure shift. So I just segregated it. Now this becomes my smaller time frame, my trading time frame zone to trade out of. Now, the market structure shift is basically a glitch because it takes liquidity, then reverses the direction and closes below. So it automatically becomes a glitch. And all I want to do is take a trade on the retracement of this and target a 1-to-1. That is basically what the shift is. Now, for shift to happen, this is very important. A shift happens in either of these three things. If it happens outside of this, the likelihood of price doing a fake structure shift, take this, and instead of reversing, it just does this. If this supply or ERL or IRL X and HTF zone is not present, price has not fulfilled its objective. If it's not having a reversal from something of a higher time frame, this is a very likely scenario. So, are you guys with me until now? Perfect, perfect. Very smart bunch of people. So, if it's not present, the price is very likely to manipulate. And in this case, this thing becomes a 5-star. This thing becomes a 5-star. Because this zone, this whole structure is gonna act as inducement. If there is nothing on the left that wants a structural shift to change the direction of price, it can become a 5-star. It will more than likely become a 5-star because there is nothing on the left that signals a reversal. So if it's nothing on the left, if price is not bouncing or reversing from a higher time frame zone or a glitch or anything, a support, resistance, doesn't really matter, everything is the same. That's the first thing. Or there is not some sort of a higher time frame ERL. In that case, that would be a high of some higher time frame, maybe a 4-hour high, maybe a previous daily high, or a daily high, weekly high, whatever. If it's not there, the likelihood of price that when this happens, the first structured breaks, it's not really a reversal. It's gonna do this and then go back up. And then it forms another glitch, which is a high probability glitch. So when is it an actual reversal? It's a reversal if it takes either of these three things. That is when a shift is a shift. And if there is nothing on the left from where a reversal can occur, then this leg, this fake market structure shift is just a manipulation to take out the 2 of this zone and then just continue. Does this make sense, guys? Magni, anything can happen as long as you know the fucking narrative of this. No, no, no. You can't use the. Yeah, you can actually, Derek. You can. You can do it. I will get into it. I will get into all of these. But let me know if you guys understand what I just told you. That one thing, for a shift to occur, do you understand this? You need either of these 3 things. If a shift, basically what is a shift? A shift is a reversal, right? It's a reversal trade. So for a reversal to happen, you need something on a higher time frame to influence the market reversal. If it's not present on the left and you see a shift, a market structure shift, this is not a true market structure shift. This is just a manipulation to take out the 2 of the previous leg. This becomes a 2 and the 5-star continues, and then we start going higher until we get to somewhere on the LTF, on the HTF, that has a reversal capability, something on the left that can actually create a reversal. If that is not present, this structural shift is fake and your shift will not work. For the shift to work, there has to be a HTF zone or a supply or a demand or a support or a resistance, or there has to be some sort of an external liquidity, the highs or the lows. I'm not talking about the IRL and the HTF. Actually, IRL and HTF can happen, because in this case, let's say if this is the 4H downtrend, so this 15-minute leg up is just going to be a retracement into something of a higher time frame. So this could be a higher time frame zone, right, for a continuation. And once we tap that, there could be a probable fair value gap in here, and once we tap that, we structurally shift. The shift needs either of these 3 things. That's it. For the shift to trade, there are either of these 3 things to trade. Do you understand this phenomenon, that for a shift there has to be something from these 3 things? Do you guys understand that? Yes, yes. I'll get into the questions. Just wait. Just let me know if you understand what I said. Okay, you understand that. Now, that was the first thing. Now, let's get to the second thing on why this could fail. So, if there is nothing on the left, nothing significant, okay, nothing significant, let's just say that there is a zone on a 15-minute, okay? So, if it's just a like 30-minute zone, you still get the 1-to-1 on that zone, but eventually you just go higher, okay? And after that, you get this shift. So, do you trust this shift or not? That's the question. Do you trust this shift or not? And why do you not trust this shift is simply because of the fact. Now you see, you have 2 opportunities over here. 2 opportunities. There is a 5-star, okay? Let's say that we are just here, okay? You have a 2, that's a 2, that's a 1, that's a 3. And now price is coming back. In this case, when you see something like this, and this is very important, you have to understand this now. When is a shift valid and when is the 5-star valid? These are the two things. Very important, because in this case, if you don't have the right narrative, you'll be like, oh, me see two trades. Me see two trades. This is pure money, that this is the 5-star in here, then I trade the shift. But no, you have to choose based on the narrative. So, first example, there is nothing on the left that is significantly of a higher time frame to make this a probable shift. There is nothing on the left. It doesn't really have to be a 30-minute glitch. It has to be a higher time frame glitch. Something of a higher time frame. Either of these three things from a higher time frame for the shift to happen. So if there is nothing on the left, this is just a 5-star formation to take out the 2. Just that. And what you will eventually see is that if there's an unmitigated glitch below this point, price is going to reach into there. And obviously the first thing is that you do not ever trade a zone if it has an unmitigated glitch below it. Unmitigated zone or a glitch below it. Never trade this zone. Never ever trade this zone. If it's a glitch, you can, but if it's a zone, you cannot. So never trade the zone. Anyways, so if it's nothing on the left and price does this, gives you a market structure shift and bounces off from a glitch or a zone that is basically a 5-star below this level, this 5-star is valid. If price is coming to make a 4, if price is coming to make a 4 after a 3 indicating a market structure shift, but there is nothing present on the left, and price makes a 4, this 5-star is valid. You trade it. And this shift is invalid because there is nothing on the left to empower this shift into giving you a TP. What you're gonna see is that price just retraces a little bit and then goes higher, eventually taking out this. So I'm gonna repeat. Situation 1. No HTF, S&D, E or I, external or internal liquidity. 5-star, that means 5-star is valid. Shift is invalid. Okay? Then we have a situation 2. If and only if there is HTF, S&D, I or E liquidity, 5-star long is invalid and shift is valid. Does that make sense, my friends? Does that make sense? I will show you the examples in a second. Yeah, you have to avoid the 5 star, because if a shift happens from a HTF supply or demand, in case if you are here, interchangeable things, but if a shift happens at a HTF supply, this 5 star should not be traded, because you never know that it'll work or not. Because if the shift is violent and the supply is violent, it takes over, it can easily run this low and then reverse back to shift. So this becomes a low probability as a 5 star once when price is coming from something of a higher time frame magnitude. It doesn't guarantee or high probability that this works. It can work, but again, that's a 50-50 thing. You don't want to take a 50-50 setup. You want to take a high probability setup. So this is a stupid 5 star to trade then if you are rejecting off of a 5 star, if off a HTF supply. If it's not HTF supply and there's no ERL, IRL, this is just not a valid shift. It's just a fake shift, which is actually a 5 star, and price will still continue higher afterwards. I'll show you a lot of examples of how and why this happens and where this happens. It happens everywhere all the time. Okay, so let me start taking questions, and I will start from here. This one. So, Umair Ahmed. So if we trade the 15-minute time frame and price comes into a 4-hour IRL right after that, but the 15-minute MSS is much higher, then should we look for an MSS glitch on lower time frame like 5-minute or 3-minute and trade that? If we trade that lower time frame MSS glitch and it gives a 1 to 1 hour, and after that the 15 MSS forms, will that 15 MSS glitch still be valid or not? Good ass question, my friend. Very good ass question. Let's look at this. So what my friend here is asking is that we are in a 4-hour zone, right? And to trade a 4-hour confirmation, we basically need a 15-minute market structure shift. Okay. To confirm that the 4-hour supply or a reversal is actually in, we need a 15 to 30-minute shift. Nothing below actually helps. Now, what's gonna happen within the 15 minutes is, let's say that if you take the 5 minutes, okay, let's say that this is a 5-minute, and this is a 5-minute shift, and it eventually just goes a little bit down. It can do this again. Now I will teach you in a fractal sense what's happening in here. Let me get rid of that. Okay. So let's say that we started from somewhere here, okay? That's sort of a low that we have. This is 30-minute. This is 30-minute, and this is the same structure but on 5 minutes. Now what you will see once price comes into this HTF supply, okay, let's say that this is a little bit higher. So once price comes into HTF supply, and this is just a zoomed in version of this price action. This is 5 minutes. Now, once we start coming up into here, okay, we are essentially over here when we come back up here. Now, what you're going to notice is that 5 minute shifts first, essentially giving you a shift. But this shift is not really valid for us if we want to take a reversal from here. This is just an internal structure. Okay? This is just an internal structure. Now, the whole thing that this internal structure does is that it just gives us this move, this retractive move on the 30 minutes. All of this leg is just a lower high on the 30 minutes. So we shift, we retrace a little bit, and then we shift again. And then what we start doing, you want to short this, you try shorting this, and this doesn't work because this is not a 30 minute or a 15 minute shift. It's just a 5 minute, 2 or 3 candles, and that is not a shift. What happens is that you try to short it, citing is at a market structure shift, but this is on a much lower time frame than the one that we want a confirmation on. This is not 30 minute, this is 5 minute or 3 minute. So what essentially happens is that we start going higher, eventually breaking the structure again. And in this case, this is what happens on this time frame. Let's say that you tap this. And on this time frame, it's just a higher high relative to this. But in here, you got stopped out before even this shift happened. And after that, you again have an internal structure break. So this is a shift again. But this is still a 5 minute structure shift. So essentially what can happen is there are two things. Price comes back into a bigger zone, in this case, this zone, okay, and it could create a higher high. Again, this is just a 5 minute, but this whole leg is a 30 minute structure. It could either do this. So in that case, when this happens, your higher time frame zone fails. And then you're like, the glitch doesn't work. It works. You just have to fucking wait for it. So these are two things, and this is why I recommend to wait for a structural shift on that specific trading time frame. Not a 5 minute. 5 minute is stupid. 5 minute, you need the 5 minute to trade the 5 minute legs. You need the 15 minute to trade the 15 minute legs, or 30 minute to trade the 30 minute legs. This is basically a part of internal versus external and multiple time frame analysis, but I'm just going to go through again because it comes within the shift. So there are two things. Either this happens, or the second is that we break the previous this low. And now what we essentially have is a market structure shift on the 30 minute time frame at a 4-hour supply or a 4-hour zone. Now, what you want to trade is this as a glitch. You want to enter after the 30 minute shifts, not the 5 minute, not the fucking 1 minute or 2 minute. You want to trade once the 30 minute or the 15 minute shifts, and then you enter over here, put your SL over here, put your TB over here. Now, don't fucking try to ask me, hey, this is also a shift. Yes, it is a shift. It's a 5 minute shift. You can trade that, but what happens if price does this and then falls? You never know. But this is a much more confirmation. This setup does not get invalidated if, until or unless this doesn't fail. The 5 minute structure can do this and then fall. We don't care about that. We care about the 15-minute or the 30-minute glitch. This is a very, very important information for you to have your confirmations and shifts. This is a very critical information, which maybe I have taught this before, maybe I have not, but this is very critical information. Does that answer your question, Hussein? Okay, let's take another question. The second one is, can a glitch on left act as your signal that the shift can work? Safi, it really depends. If it is HTF, then basically a higher time frame than your trading time frame, yes, it can. But again, you have to see the narrative. Where is the shift happening from? Where is the shift happening in? If it's where your higher time frame is likely to reach into. If it's signaling that we are going to go higher, yes, that can essentially, it can also be this. So let's say that this is a 30-minute glitch and this is also a 30-minute time frame. But on the 4-hour, you want to go higher, right? So what essentially can happen is the fact that this 30-minute glitch gives us a market structure shift. Okay, it gives us a shift, and we have a shift over here. We have a shift over here. That can work. That will work. But the thing is, will it go and break the low? No, not really. It will start bouncing again from something inside once it reaches this, and then just go up again. So a 30-minute over there will essentially make the price retrace. But the thing is, this glitch on the basis of a 4-hour structure, it is in discount, or it's not really above the 618. So that essentially doesn't really have a lot of price. It's again how the 4-hour is looking, where your 4-hour is going, then you see the 30 minutes, and then you see the 5 minutes, and it's just basically multiple time frame structure. But it can work. It can work. It cannot work. It's based on your narrative. The best thing is to do that. You have a 4-hour structure. You wait for a 30-minute shift. You take the trade. Or if you have a 15-minute structure, you wait for the 1-minute shift, and then you take the trade. If you have a 1-hour structure, you wait for the 3-minute shift, you take the trade. But a higher time frame zone or supply or demand or an ERL, they are much important for the shift to be valid. Because if that's not the case there, it's essentially just going to turn into a 5-star, and then we continue higher. Okay. IRLX, HTF internal liquidity. Yeah, Malik Sikandar, yes, that is what I basically mean, is the fact that if we are going to reach into something over here, let's say this, okay, let's say that this is a zone, and essentially our 4-hour is looking higher, like we want to go higher on the 4-hour to reach whatever into. So when this will happen, there's going to be something, so some sort of a internal liquidity, a 4-hour FVG, 1-hour FVG, and there is also going to be a 4-hour or a 1-hour zone. Okay, so when price retraces back into here and we see another shift, this shift is valid to take the price back higher, to possibly create a higher high on the higher time frame. But this shift also needs to happen again in a higher time frame zone. So you just basically need a higher time frame zone for a shift to happen. And that shift needs to either mitigate an ERL or an IRL in this case. And it's not necessary for the shift to happen at the 0.5. It can maybe go deeper, then do this. Or it can come into at least the point 3 and then do this, or it can, you know, reach into the 618 level, do this, 66 level, 75, whatever, as long as price has uh, mitigated or achieved some sort of an objective of your higher time frame, that shift is valid. And if it has not, let's say that we actually, let me go back above. There is the 618 over here, and the higher time frame zone is over here, like the 50% of that zone is here, and just below the 618, maybe around here, okay, around over here, there is an FVG, okay, there's an FVG, there's a 0.5, and again this is the 618 level. So if we are reaching into here and we front run this whole FVG and we shift, the likelihood of this shift failing or this shift being a fake market structure shift is pretty high, because the price has still not achieved the objective. So this can essentially become manipulation, and this high becomes the 4 of something over here. There could be a glitch over there or a zone over there, and then we continue lower, filling the objective, then bouncing, then this shift, essentially this shift is valid, and there could be some sort, as I said, that there should be something over here to send the price down. So again, this is objective, but you just need a higher time frame objective to fulfill itself. No shifts, good with OGs, agree. I mean, it's lots of X's over. I mean, honestly speaking, shift is a pretty powerful model as long as you have the narrative right. But it's your problem. At bearish, if we can wait for a bearish 5-star or 1.2 fib closes. Huh? At bearish, if we can wait for a bearish 5-star. I don't get the question, One Piece. There you're free, let go in your route. Okay, yes sir, after read, let me know. Okay, it's like we're coding. If not, yes. If price is sitting in a shift supply zone, then buy 5-star is avoidable. Yes, I have answered that. Hussein, can the act like a 5-star to their inducement? Yes, it can. Obviously, that is what I just touched on, Hussein. It can definitely act as a 5-star zone, and it can also act as a higher time frame zone as well. So you can trade the 5-star zones of a bigger time frames, the 5-star zones, and pair them with the shift, and then trade them after confirmation. So that is what I mean. A shift is basically a confirmation. When I give you zones, when I give you higher time frame zones, that hey, you can trade this zone, but you need a shift or wait for a confirmation. Confirmation is basically a shift in that specific zone to trade out from. That is what I essentially do. If you have seen my trades, they are 5-star glitches or 5-star zones, and I wait for shifts so that I can trade out of them comfortably and get an essentially a little bit more risk to reward ratio out of it. If retracement was, by the way, 45 5-star, don't mind send me LTF trades on WhatsApp. No, okay, LTF unlimited money. So I was back testing shit. Oh, yeah, you were. UAs are the stock markets close on Monday and Tuesday after running index for fuck that shit. For shift FTF better in simple words, yes, obviously. 5 minutes stupid, yes, it is. So we will not trade the HTF zone glitch directly. We'll wait for the shift. Yes, exactly. That is what I meant. You don't have to trade the 4-hour zones directly when you have time. You can wait if it's a 4 hour zone, and for it to work out, the 15-minute first has to be bearish. So that is what I'm basically trying to say. You don't have to rush into entries and have a tighter stop and have a bigger stop loss. You can wait for the structure to tell you that, hey, I'm gonna shift, and the likelihood of this zone reversing the price is higher, and then you can get involved. If the 15-minute MSS zone is quite large, will that zone still work? What is that? Bro, that is not a 15-minute zone. Honestly speaking, that is not a 15-minute zone. That is at least a 2 hour zone. That is a 2 hour high. And again, that is the same thing that I just said. Consider this a 2 hour zone. So for it to play out, it has to go above. So for example, let's just say the picture that you sent is this thing. Okay? This price is moving up, and this is a 2 hour market structure shift. So what's going to happen if we are to shift this 2 hour zone? Price will eventually close above on a 2 hour, and that becomes a 2 hour shift. And then all you have to do is now wait for price to come back into your 2 hour zone, and then you can essentially wait for a 5-minute shift or 15-minute shift and then trade out of it. So that's like a confirmation that this 2 hour zone is indeed going to send us higher. That is how I actually trade the super glitches, basically. I just look at the bigger zones, I look for confirmations, and I trade out of them for a higher risk to reward. In this case, I can actually, after the shift is confirmed, I can put my stop loss over here, and I can target this zone. And I have countless trade examples of these sort of trades. If you have followed me, if you have followed my charts, you know that I trade this. This is my highest probability model because it gives me more risk to reward ratio, plus it gives me much more confirmation, and it's much higher probability. Anyways, shift is shift. Actually, you messed us up. Yeah, okay. So as long as one of those three conditions are met, the shift is valid. Yes, one. Yes. Shift is killing me. Put him in jail. I'll be happy with OG and 5-star. Okay, good for you. Shift is Khilji's. Okay, you missed that. If price is an HTF glitch zone, we should wait for LTF shift, and then how to execute? I mean, on what time frame? Bro, are you kidding me? What sort of a question is that? If this is a higher time frame zone, simple stuff. This is a 2-hour zone, and you are trading the 15-minute structure. You want to take the trade on a 15-minute structure. You don't want to enter directly over here. You wait for the price to tap into it and then shift the structure on the 15-minute. Now this becomes your 15-minute shift. You trade this, you put your SL over here, you put your TP over there, and that's it. Kaboom. Simple stuff. Can we summarize into a short summary of the whole lecture if possible? Yeah, bro. Come on. I have taught this in as easy manner as I can. This is well, then you might as well watch the whole thing again. Because this is a lot of stuff in there. I can't summarize that. But basically what Shrink has said, there are two situations. If, honestly speaking, just watch this again. I can't summarize this. I'm watching this 10x today. Yeah, you can. I mean, obviously, this is I am taking you step by step and basically teaching you how I see the markets, how one thing fits into another, how to filter the better trades from the worse ones. So you will, honestly speaking, I don't expect you to understand this in a 1 or 2 sessions. Again, it's going to be practice. It's going to be you going back to the lectures and learning from them again and again, because you can't possibly understand this in one thing. It took me ages. So if I expect you to learn this in a month, you are probably going to learn this in a month, but not in a day. Yeah, so again, so I'm watching this and just waiting for question answers. Bro, I have literally been asking you to ask your questions so that I can answer them. I had been taking 5 questions for now. So if you have any questions, please answer. Okay, in situation 1, if there is a glitch instead of 5 star. Huh? No HTF. Bro, if there is just a glitch, it's still valid because you can possibly just do this. If it's not a 5 star and it's just a glitch, it'll still work because that is actually the structure that matters. Even if this happens, if it's not below, you see, if it does not make a glitch, if it's just a glitch, that'll work. You can take that. Just don't trade it as a zone. If it's a glitch or if it's a 5 star zone, both are valid. Any other questions, lads? 4H zone 15-minute shift. Yeah, honestly speaking, this is what I've literally taught you guys in the YouTube. Whatever your higher time frame is, you divide it by 20, and that will be your confirmation time frame or your trading time frame. So if you are trading, you can make it vice versa as well. So if you are trading 30 minutes, your higher time frame is going to be 4 hours or 8 hours or 6 hours. But you can use 2H and 4H interchangeably. So you can also take 5, 15, and 30 minutes interchangeably. You can basically just look at all 3 of them and see if that makes sense. And if it's 1H, you have it as 3 minutes for confirmations. If it's 15 minute, you can use the 1 minute. 30 minutes, you can still use the 1 minute. It's basically like, it's like a pair for your higher time frame and your lower time frame. Yeah, you can still use it. 1H plus 5 and 3 minutes, you can use them interchangeably because they do give you some sort of a narrative and some sort of structural confirmation. If you have a 3-minute confirmation but you don't have a 5-minute confirmation, don't fucking trade it. If you have a 5-minute confirmation, but if you have a 5 and 15-minute confirmation but your 30-minute is just a wick, just as explained in on the gold. You see, when we talked about gold and you were asking why is that a fake shift, because your 5-minute was giving you a shift, but 15 and 30 were like, no bro, this is just a fucking wick, and we have still not shifted. Actually, it was Bitcoin. Literally this thing, where is it? I think so, it's like, oh, this. So this is essentially just a wick. This is not a confirmation. Similarly, it's not really a close, that's just a wick. But on the 5-minute, you are like, hey bro, that's the market structure shift, wow, I'm gonna short it, and then you get fucked around. So yeah, that's not a shift. Any other questions, guys? Oh yeah, sure. Let's go into my favorite thing to do. That's basically how I trade. Okay. So we will take this range as an example for Bitcoin. I'm gonna take you through a trade that we traded live, and I gave you that as a trade as well. So what do we have here? That, my friends, is a 4-hour shift. We bounced from 59 all the way to 72. So that's like 15% move. And I know for a fact that this is a retracement structure. And if you want to add more things, you can add this market structures, market cycle 61866. I essentially wanted it to go higher, but once the 4-hour shifted, I mean, again, 4-hour is basically a pretty solid time frame to trade on. Plus, this 72 level was also, if you see around this 74, this was the previous swing low. So that is where the narrative is coming from. But giving you an example, I did expect it to reach into this, but it didn't. So again, 4-hour structure shift is pretty strong structure shift. And if you remember that I said what I am expecting price to do while it comes here is do this, shift, structure, and go down. That is what I posted. Why? Because I wanted the price to come into here after it taps the 50% off. This glitch. This is a glitch. And I want confirmation with a shift again. So we retraced, we had a retracement price action, we had a shift. This is essentially a shift, you know, a market structure shift. So I expect price to go back down now. But I also expect to retrace back into this glitch, mitigate this glitch, and then start going down. So if I want the price to go down from here, I expect a shift on the lower time frame. So in this case, if it's a 4-hour shift, I want the price to come into the 50% at least, and then give me a shift on the 30 minutes. So let's go on the 30 minutes. And we essentially had a 30-minute shift. This is not a shift because this is not a valid structure. We need more candles. So this is like a poor thing, I don't know what the fuck is that. But I waited, and then we got a breaker structure and then a breaker structure downwards. So that is, my friends, another shift. Now I know that the 4-hour is bearish and the 30-minute just gave me a confirmation at the 4-hour glitch midpoint that hey, the 30-minute is also bearish. So my higher time frame and my trading time frame are now aligning. What happens then is just pure fucking beauty. Tap, instant reward, and we got what? Exact TP to the bigger glitch. So obviously this was a 3-hour trade for me, but in your case that's a 1-hour shift, and that's about it. And then if we keep continuing, that is a 30-minute glitch, and then we go down, we keep going down. This could have been a sweet what could it be? Yeah, so here's an example of the 5-star again. Oh, actually we had mitigated before, never mind. So yeah, I mean, honestly, this is how it's working. And again, now more examples of the shift. In this case, I know that we are ranging for a second. Like, we know that we are ranging. So there is a likelihood of price to bounce from this glitch or this zone. So first time it comes there, it doesn't do anything. It doesn't really do anything. But we now have another shift after this. we have another shift. And this is, again, this is probably like a 2 hour or a 4 hour zone. So this is 4 hour glitch right around here. And it probably didn't give us a shift entry, but again, it played out. It didn't really give us the shift entry. So we're gonna remove this, and then we wait for another thing. We still have this as some sort of a demand, because it is a demand, and you don't have to make your demands, but you can, since it's an OG as well. It's an OG right there. That's an OG. So what happens here? First tap, nothing really happens. We don't mitigate it. The second tap happens. Second tap, and then we get a shift in structure again. So that is a shift in structure. At what? At a demand level. That is all I want to see. A shift is valid to trade at a demand level. If it's shifting structure at some sort of a higher time frame demand, I know that that shift is valid for me to trade. And all we do is trade this shift all the way to the dot. We get a TP. That's it. We don't care about anything else. And another example. So what do we have over here? First things first, it's a zone. Second thing, it's an OG or an internal zone. Actually, it starts from here. It starts from here. Now, notice this. Notice what is happening. If I go back to the 2 hours or the 4 hour, regardless, same thing. We have this as a significant high. And also, if I show you the EMAs are bearish. They're bearish. They're bearish. They're bearish. And 4 hour EMAs. Let me show you the 4 hour EMAs first. So this is the point, right? 4 hour EMAs are bearish, so we know that the 4 hour we're bearish. Okay. Coming back to your where's that? So over here we have an OG. Could have placed the limit over here, and I did actually, but it never failed. It never failed. So you know that these 4 hour highs, this is what? That's an external liquidity. These are 4 hour highs. So once price went above them, that was a tap into a supply, first thing, and also an external liquidity. That was it. And after that, this was the low that created this high on the 30 minute. This was the low that created this high. Do not take these as the lows, because that is not it. That's a 5-minute structure within a 30-minute structure. So in this case, that is a 30-minute structure, and that is a shift. We obviously do not get the trade, but that is, my friends, a shift. And this is essentially just how you can trade your shifts. You just need higher time frame zones followed by lower time frame confirmations. This is also a shift. Oh, this is actually a glitch, but this can also be a OG. 1, 2. Okay, it starts from here. This can also be an OG. We obviously front ran it, but that's not the thing in here. The thing is, let me show you now. When we reached into here, we had obviously some sort of a HTF thing to fulfill, right? The first thing, the glitch itself was to be this whole zone. It's also on a 4-hour time frame, so this whole zone was to be played out once we reached into here. So when we reached into here, we wanted to see some sort of a market structure shift. And had we had something like this over here, I would have honestly longed it till there. Right until there. I would have done that. But again, this was the whole weekend price action, war situation, everything else, blah, blah, blah. I mean, this was a pretty fucked up price action. So first we fell, and then we bounced rally off. Doing what? We probably took these highs as well. Or we didn't, but I think we did. Yeah, that's a liquidation event over there. So in this case, the markets are pretty volumeless at this stage, but this is what it is. So in this case, if we now close below this, we will essentially have a shift, and we can take this and short it down until here. Why? Because it is one, we are at an HTF supply level. We are at an HTF supply, and we are just arranging. So this is basically how the shifts and this whole thing works. If I look into the gold, same thing. And this is the case with that. As I was explaining you, that when is a shift an actual shift, and when is it just a fake shift. So you see this as an example. Like right here. Is this a shift? Is this a shift? No, because we still haven't mitigated the 4-hour narrative of this particular zone. There is imbalance until here. We haven't really hit the 0.5 of this bigger zone. So this is not really a shift, and it's just a manipulation. This shift is likely not going to work. And if you see it over here, we obviously chopped here, but we never finished that one-to-one. And again, if gold is to be bullish, what are the likely targets that it can achieve? So as you can see, there is like shit ton of liquidity all the way up to 53.89, and there is probably a 15-minute OG somewhere over here. So if I go into the 30 minutes, yep, that's a 15-minute OG. And honestly speaking, 54.18 actually. So 54.12 to 54.18. I think gold can reach that, given the whole geopolitics thing, and when the market opens, this is a very likely scenario for gold to get into and reach. So again, and another thing, based on the market structures sessions, if this zone is to play out, if we need a reaction off of this zone and we want to reach something in here, what's gonna happen is that we have to shift bearish on the 4-hour and then we can target that. I mean, obviously this piece of shit can just fall in a couple of days, but that's not a good price action. And this is a good price action. So, good enough examples for you. This is going to be pretty simple, honestly. I'm not going to go to chart examples on that. It's just going to be very, very simple. 5 minutes at max. So, what we have here is a similar price action. Like, these are the same price actions, but just different time frames. This, let's say that this is a 4-hour time frame. This is a 4-hour leg. We had a low, we had a high, then we had a lower low, then we had a lower high, and then we had a lower low. Okay? This orange point is just the zoomed in version of this 4-hour leg. So if we say that this is an hourly structure of this 4-hour leg, we still have what? We have this, same thing. We have a retracement. So on the 4-hour, this looked pretty like a 2 candle, but in this case, these are like 8 candles. So we had a structure in there. Then we had a lower low breaking structure, lower low breaking structure. Same thing, just a little bit zoomed in and in more detail. And this, let's say that this is like a 15-minute. So same thing as all the previous two, but just a little bit more detailed, more internal structure. And that's about it. Nothing really different from each other. Now the point of OG. The OG is basically the first and the last, first or the last zone. Basically, it's like a market structure that started the move. That started the move of a higher time frame. So in this example, we started this leg up. It can be retractive, it can be impulsive, doesn't matter. As long as it's a leg, there is going to be an OG in there. So when we started this was the last structure that led to a retractive leg up. So it started this move. So the first structure or the last structure, the first MSS or the structure, or it could be a zone, something like this, that started the move higher. This starting point, the origin of the bigger move, this is what I call the OG. And whenever price comes into it, even though that it's gonna be bearish, it just still gives us some sort of a reaction, which is enough for a 1-to-1 risk to reward ratio. It comes there, it gives us a reaction, and then it falls. But all we need is that 1 hour. And the reason why this OG works is because we started the whole 4-hour move, right? So if and only if this structure has to break, this point, this particular point, becomes the last standing defense of the bulls. In case if they want to take the price higher, they have to defend this higher time frame structure, because if price goes below this, the higher time frame structure breaks. This is a lower time frame glitch or an MSS or a zone, doesn't matter. It just has to be at the end or the start. That is it. It could be a zone like this. It could be a glitch like that. It could be a shift like that. Doesn't matter. As long as it's the first or the last, whichever point started the bigger move, the bigger leg, the end point or the start point, which I call as the original or the origin, that is the OG. And the reason why it works is because it's like the first or the last, basically like the last defense before a higher time frame structure breaks in both cases. So this will be an OG because this point started the bigger leg and then broke the structure. And this point is going to be an OG because it started the retractive leg and went all the way to this point, this OG of the whole leg. So even though that this is a big ass zone with 50% over here, we can essentially still reach into that and trade it high, trade it down. So an OG is this, the zone is this. Now there are two things to just keep in mind now. Only two things. This is not really a very hard concept to understand. Just point and find the reversal point of the bigger leg. That's all. But there are retractive OGs and impulsive OGs. Basically counter trend and pro trend. So if you know that your higher time frame is in a downtrend, the short OGs are higher likelihood of playing out. Like they are high probability. So are the low probability ones, but again, if you're downtrend, the short OGs are high probability and with the trend. And similarly, your retractive ones, the ones that initiated a retractive move. So if you're a downtrend, but you still have a bullish OG, you can still trade it. Honestly speaking, they have the same probability of working out. But the thing is, you can trade with the trend on a bearish OG in this case. But you can't expect the bullish OG to give you a reversal back and up there because all you want is one-to-one over here. But if you are on a higher time frame bullish leg or bearish leg, you can essentially get involved here, your stop loss over here, and you can target the whole zone. Basically what the shift is essentially. And over here you can also see a shift. Voila. So OG, if it works out, it does indeed give you a shift to trade into it as well. So that is essentially what the OG is. Honestly, you can go and find out the charts, just look at the extreme endpoints where the move starts from and just look into it. You will find the OG. That's pretty it. Honestly, that's it. It's if all OGs, okay, so once a structure is broken, once a structure is broken, in this case, once we have a break of structure, this OG has nothing to do with being mitigated or unmitigated. As long as it's a structure you can put a high and a low from, it remains valid because the OG does not fucking care if it's mitigated on the lower time frames, because the OG gets activated after a higher time frame move is made. So if you get a break of structure, this OG becomes valid after the break of structure. And similarly, this OG will get valid after you go higher and then start coming back down. So once you make a significant move either away from the OG, it only gets activated then. Just don't call it an OG if price just does do this and then go back. No, that's not an OG. It has to go a little higher, significantly higher to consider it an OG. That's not an OG in this case. If it just does this and then boom, this is not an OG. If it goes into the premium and then do this, that's an OG. Makes sense? Oh, I just forget about what I said in that. Just do what I say now. Yeah, I have recorded it. I have recorded it. 2.5 hours of when shift becomes OG after 5 minute glitch or 15 minutes. What the fuck is that question? Saying what is that question? I am hungry. Ask me the question, Swing. I did answer that question if you were looking closely into the. When I taught the shift, I answered your question in that. I find 15 and 30 minute glitch, then shift to M5 and find shift OG. Yeah, good ones are 15 minute legs, 15 or 30 minute legs, and then you can find the 3 minute OGs in there. And more than likely, when the price is ranging, you get those ranges. So, yeah, it works. I know it works. I know it works. If we have 5 star unmitigated, then we won't take above glitch, as you said. But if we have glitch unmitigated, not the 5 star. If we have 5 star unmitigated, then we won't take above glitch, as you said. But if we have glitch unmitigated, not the 5 star, then we can take the above glitch. Okay, let me guess what you are trying to say. So I think what you are trying to say is. You're saying if that you have 2 unmitigated glitches, can you trade the first one? That's what you mean? Yeah, you can. No worries about that. Of course, the glitch is basically a confirmed low. It's a protected low or protected high. You don't have to care about that. The glitch is a glitch. It works. And if the glitch is actually taken out, yalla habibi, be for a fact ready that this is a market structure shift, because a glitch doesn't fail unless it's coming from a HTF supply and it's getting rejected from there. A glitch is a very strong structure because it already has taken liquidity. It doesn't fail unless it's from a higher time frame objective. And if it's a failed, it can obviously be a shift then. And that's a very, very super high probability shift. Super high probability shift, because it just takes liquidity, then that's like a triple shift. Triple rating. Last question, the one I asked in personnel. Let me go to the personnel. Okay, you have sent me the personnel. Wallahi, at the beginning you said the glitch is a trend continuation, so we'll only trade latest recent glitch. Then after the shift we won't trade bottom because you trend change. Then later you said that we'll only trade below 0.5 and not the above one, not the top one, not even the recent one before the shift. So in one context you're saying before shift we'll trade the latest recent first glitch. Then you said we won't trade that. So the question is, would we trade the latest recent glitch before the shift or not the shift? I answered it in the 5 star thing when I first taught you the 5 star, and then I taught you the shift. I told you when to trade this as a shift and when to trade it as a glitch or a 5 star. I've already answered that. We good? When HTF zones are here, okay, situation 1, situation. Yes, exactly. Situation 1, situation 2. So you can basically differentiate from actual shift and an actual glitch or the 5 star. If it's situation one, I don't know what the fuck the situation was. Uh, Whatever the situation was, if it's for 5 star, you take the 5 star. If it's for the shift, you take the shift. And you can't have both of them together. You can, but you fucking need to know what's happening. Again, don't do that. HTS zone with an LTF is a high probability glitch as we got the confirmation on the trend. Yes, that is why I say the shift has the highest probability to work out, because shift is indeed a very powerful model because it aligns itself with the higher time frame trend. Yeah, bro, we start from tomorrow, start trading it. Yeah, we do that. Tomorrow, a little bit orientation again and teaming and stuff. I gotta go and look into it. But yeah, I'll give you guys an assignment for tomorrow. Yeah, please fucking watch the recordings. ईदी, हाँ भाई जी ईदी पे आते हैं, करते हैं ईदी पे भी करते हैं अभी. I wanna go and make an announcement for the ईदी as well. Get your monies ready, because again I'm not gonna give you the monies, you will come with the monies and then I will essentially make 500 out of it. That is what the point is for the ED. We're gonna do a challenge from 500 and essentially flip 500 to 1000 in 20 days. आज 11वां रोज़ा है, I think so. Yeah, that is what we can do. And again, if someone doesn't have 500, just bring whatever you wanna double essentially. So if it's like 200, 100, 150, whatever it is. And if you have 2000, you can bring 2000. I don't care. No, it's just gonna be a 2x. Simple as that. Guys, shut the fuck up.